Thank you, friends, for being back after a quick lunch. Others are trickling through, but we think we should not hold back the proceedings. Friends, essentially, the frameworks which have been built for anti-money laundering and Financial Action Task Force, or FATF, are frameworks to protect the rule of law. In the previous session, we talked about cross-border terrorism that cannot exist without money being available through channels which are able to fund such activities. Even otherwise, other international issues of high concern in the sphere of human rights and the rule of law are drug trafficking, human trafficking, and even trafficking of nuclear technology, other technologies which operate under restricted frameworks and, if are not in safe hands, can spell a doom globally. So that's why the anti-money laundering regulations and FATF framework, which helps to implement it, are very essential tools of the international economic governance. What we are discussing here is whether the tools which ostensibly are there to shield and protect and promote the rule of law and human rights can have other aspects also, which can at the same time have potential to undermine these very values. And that is where it is not just the economists, it is not just the policy makers, it is not merely the financial experts on whose hands such activity should lie. Legal professionals who are naturally trained and have as part of their professional domain protection and promotion of rule of law and creating legal and regulatory frameworks, those who are cognizant of these values must participate and be engaged in a manner that protects the other values as well. This thought came to me while devising this topic when I was dealing with certain jurisdictions in Africa who depend on generic drugs from India, which are procured through World Bank procurement channels to safeguard their populations from disease, from endemic disease, and for treatments which, in the absence of availability of cheap drugs, is a direct assault on the minimum right to life. Because if a cure exists and it is available but not affordable, is a travesty and it undermines human rights. So what happens? Not all countries in the world have equally strong financial systems. So when we build frameworks to prevent money laundering, like Know Your Customer, and we have other group of recommendations like 40 recommendations created by FATF, we must see what are the implications for this for the countries, communities and populations who are already underfinanced, who are already underbanked, and who are still struggling to get into the financial inclusion space. Whether these regulations help to push them in or to push them further out is the situation we wish to highlight here. So, talking of the medicines, I discovered that some medicines like even metformin, which is a basic drug for diabetes, if it is available in India for a month's treatment for less than $1, the same manufactured in India is available to a poor person in another country for $25. How this $1 becomes $25? There are many reasons for it, including the commercial reasons, but then this procurement is also part of the World Bank funded initiatives. So, how does this huge markup exist? So, looking deeply into it, one of the problems we found was that most of the small countries with small banks and local currencies, not convertible, then ultimately depending on international convertible currencies, could transact business, because when you import something, you have to provide payment, you have to provide some kind of financial instrument in terms of bank guarantee, you have to provide an instrument in terms of letter of credit, based on which the import can be done. But what happened? There were instances in which the reasons were different, but large international banks, multinational banks, which were providing a mechanism that is called the correspondent bank mechanism, by which a small bank can transact internationally through a large international correspondent bank to make these transactions. The letter of credit and bank guarantees are backed by those instruments, and that's what made the whole transaction more financially viable and efficient and cost effective. But when the AML regulations kicked in, some big banks in Europe were faced with huge penalties by Security and Exchange Commission of United States, running into billions of dollars, because the lapses in AML were found to be quite significant. But having penalties to address them and not push for in the equal measure the structures which will oversee and the principles which are to be implemented. So, what happened? Couple of huge multi-billion dollars penalties sent shockwaves and panic into financial sector and the banking sector. As a result, the banks, apart from gearing up for implementing these regulations, started de-risking the operations at a lower cost and effort. So one of the risk areas was, okay, we can do the KYC. How can we vouch for a small bank in Africa or Asia which is doing these transactions through us, that their lapses will not hit us? So instead of addressing that and creating a framework, or also demanding internationally that this is the situation which can bring problems to our doorsteps, so you have to give some kind of concession, you have to give some kind of time frames to implement these, because banks work on commercial logic, they simply started terminating these relationships. And what happened? The result was that the smaller banks in countries, and sometimes countries as a whole, were left out of the financial transaction network through this device, which means they had to depend on third-party contractors and suppliers, which led to multiple markup on the essentials like medicine, foods and all, the availability of which and affordability of which is a core human rights and rule of law concern. There have been efforts of late to address this, and we will have a speaker from Basel Institute of Governance, Switzerland, Katerina, who will be making a video presentation to us today. And she advises on FATF framework and AML frameworks to governments and to big clients, and helps develop these frameworks. But we thought that it will be very important that as law societies, bar associations, we are confronted this situation within the profession also, where there are reporting obligations to prevent money laundering, which can be onerous, which can have stress on client confidentiality issues. And so that also requires a discussion, because ultimately if lawyers are not able to work having full confidence of their clients, and unless until they are an accessory to the crime of money laundering, what advice they give, what services they provide should be out of the reach of any authorities. That is how the independent professions work and achieve their objectives within the hierarchy of rule of law. So I think these aspects need a deeper deliberation, and in this convention we are bringing these issues to the table so that we can apply our minds collectively to find appropriate solutions, and as bar associations create policy briefs, advocacy briefs for our own governments and for international bodies. Thank you very much.